let's talk about putting on a short-term trade.
Please subscribe to our channel. Happy trading!
Trade. Now, the premise that I want to go over this afternoon is the premise of if I wanted to collect $100 tomorrow. So I'm doing a short-term trade, one DTE. It's going to expire tomorrow, but I want to collect $100 after fees and commissions. And so normally we're doing something, we're saying, okay, $70 to $100, and we're not including fees and commissions. We just want to be as safe as we possibly can. Not that we don't want to be safe this afternoon. We still want to be safe, but we're changing the premise just a tiny bit today for this short-term one DTE trade. We're going to try to get $100 after fees and commissions. So that means you have to collect more than $100 and factor in the fees and the commissions of when you're going to get out of the trade. So we're normally trying to get out of the 1 DTE to 5 to 7 to 14 DTE, the short-term trades, not the 0 DTE, because that percentage changes for us. But on these 1 DTEs that we do quite often, we're trying to get 70 to 80%. So we're going to factor in 70% for this 1 DTE trade, and then we're going to look at all the fees and commissions and say, okay, if we get out of the trade at 70%, will we still collect $100? Okay, so that is the premise for this trade this afternoon. All right, so let's jump over here and let's go and let's type in the SPX. We're going to do it in the SPX. You can do this in the /ES. As you know, this afternoon we're going to do it in the SPX. So we're going to go to this 1 DTE here. If you're new, and I know it's a number of new people, DTE means just days to expiration. Okay, so you have the 0 DTE. That means it's going to be literally a day trade. It's going to expire that day. 1 DTE means it's going to expire at the end of trading tomorrow. Okay, and so if it was 100 DTE or 100 days to expiration, that means it's going to expire 100 days from now. So in this case, we're choosing the 1 DTE. And then when we're looking at these type of trades, we normally try to figure out what is the VIX telling us, what is volatility telling us regarding the expected percentage move up or down. And so if we look at this VIX, it's a little lower than it's been recently. And we're just looking at the cash VIX here. This is this here, and you can see that it's about 1865. So what we're going to do is take 1865 and divide it by 16. That's going to give us an expected move 1.16%, and that's what the VIX is saying. Doesn't mean it can't go up more than that or down more than that, but that is the expected percentage move based on the current volatility. You can do that rule of 16 on the VIX if you're doing a 0 DTE or a 1 DTE. If you're doing something longer than 1 DTE, it does not apply because it's basically just a 1-day percentage move. Okay, a 1-day percentage move. So we know now that we want it to be, we want to factor in that, okay, it's a 1.1 basically percentage move. So we want to be further than that if we can, right? Away from at the money. Then if we go over here, we can look at the expected move that TastyWorks is giving us. That's saying plus or minus about 41. And on TastyWorks, which is really interesting, they have this kind of ruler here, this orange ruler. You can say it's brown. That this is kind of where that expected move. This is the same thing that equals theirs, but it kind of give you a visual when you're looking at this. Okay, if I'm outside of here, then I'm outside of the expected move on the put side there. If I'm over here, I'm outside of the expected move on the call side. Kind of gives you a range. So that's plus or minus 41. Usually we're trying to double that number, but I also like to look at the straddle number here. So this is the straddle number. The straddle number is usually a little higher than the TastyTrade. I keep saying TastyWorks, but I have to get accustomed to saying TastyTrade. They did change their name. So the TastyTrade formula, they believe is better. They believe it's closer to the one standard deviation percentage of about 68%, and that the straddle number is a great number to you to kind of look for that expected move, but it's not as exact. It's a little overstated usually, more than that 68 or more than that one standard deviation amount. So, but I like to look at the straddle, and whichever number is higher, and it's usually the straddle number when you're looking at TastyTrade. So if that's that 43, I'm just rounded up to 43 here, and if we say the 43 times 2, that's going to take us to 6-point move. That's what we're going to look for. And so I'm going to hit this clear, and then we factor in all that stuff. And if we go down and we start at this 5 delta, and we're trying to keep in mind that we say we're going to try to get $100 after fees, that includes 70%, right? So we got to get a decent amount. So we're going to go here, we're going to get this, we're going to do a 20-point wide at the 5 delta there, and then we go to this put side here, and let's say we do a 5-point or 5 delta and 20-point wide here. So this right here is going to be 120, okay, 120. And if we look at the fees and commissions, that's 107, right? So 107 is how much we're getting after fees and commissions. Just looking at this down here, everyone, 107 after fees and commissions. So if we take that 107 and we say times 70%, right? That's only going to give us $75. So we need to get more than this to be able to get the $100 that we want, right? So we can either do two things. It's several things, but we're gonna choose one or two. We can increase the width of the spread, or we can move the spread closer to at the money. Because as you go closer to at the money, for example, if we move this spread here, this here, towards at the money, and this is going to at the money on this option chain, then the premium is going to get higher, as you can see here. So then we can get the amount we want, or we can move the call side closer to at the money by taking this spread and going up to this direction here. So that's going to give us more monies, or we can widen the spread. So we're at a 20-point wide now. If we went to let's just say a 30-point wide, it'll look like that. And then on the put side, we would do a 30-point wide as well. And that would go to here. And then if we go over here and look at this, this is going to be about $135. And the buying power is just going to be just under 2,900. So if I take the 140 times 70%, that's going to give us $98. So that doesn't work, right? That doesn't work for us because before fees and commissions, that doesn't work. So what we're going to do is take this back to 20 points wide, and we're going to move this put side up. And we're going to move this put side up to, let's just say, the 7 delta here, and we're going to do a 20-point wide, okay? And then we're going to move this call side up to a 7 delta, and we're also going to do a 20-point wide. All right, so if we did this, now we're getting 210, right? 210, we collected more because we went to the 7 delta on both sides. Now, if we look at this and we say 202 after fees and commissions, once again, we're over here, everyone. The 202, I don't care about the cents. 202 times 70%, right? That's going to take us to 141. So that's a lot more than we need regarding the 71. So we can decide if we want to move something away, further away, right? So for example, if we move this call side to the 6 delta and keep it 20 points wide, move the put side to the 6 delta and keep it 20 points wide, right? So, and then we go and look at the amount. We're getting 165 there, 170, give or take, right? And then we say, all right, 157 times 70%, that's going to give us 109.90. So this could work, right? This can work. And so we're going to send this bad boy and see if we can get filled. That's 165. It's losing some ground here, but we're going to see if we can get it. So that's not working. So we're going to send this back to 165 and see if they'll give it to us. If not, we'll make a small adjustment to be able to get filled. So we're going to give it about 5 seconds. And so there we go. So we just got filled, and this is the one DTE trade.